Hey Bowtie Nation, Joseph Hogue here, updating you on what could be a once-in-a-lifetime opportunity. Last month I showed you why the 42 days around earnings season could bring a bottom to the market as companies warn on tariffs, but as stocks crumbled to a bear market low, it was also going to be your opportunity to buy in for the next bull market. The market has now jumped 10% from that low, just under 5,000 for the S&P 500, just under the level I was watching to start buying back into the market. We're not out of the woods yet though, with 18 days left in earnings and crucially, the retailers that could warn the loudest on tariffs. So yeah, we're up a little from the crash, but it's like celebrating halfway through a horror movie just because the creepy music has paused a second. Nation, over 25 years investing and more than a decade working in professional analysis and venture capital. I've been here before. I've not only invested through bear market crashes in 2000, 2008, and 2020, but learned from them and have seen how these become the opportunities that make you rich. Like investing in Amazon at the bottom in 2002 and riding it 280% higher over the next year, and then to a 7-figure payday longer term. So I want to update you on the market outlook, new levels to watch for, and how to invest. I'll also update you on the 5 stocks from our last video, but stick around because I've also got 5 more stocks I'm buying, 5 with an average 226% upside to my price targets. I know it's a longer video, folks, but spend the time right here and you will be rewarded. I pointed out in our earlier video that corporate profit margins were just not wide enough to eat the increase in costs coming from tariffs. You see here the net margins, the percentage of revenue left over after paying those costs, that bottom line profitability. And for the market overall, it's just 12.4%. For stocks within some sectors, it is much lower. Companies in 6 of the 11 stock sectors report an average margin less than 10%. And while tariffs on most countries were paused for 90 days, those imports are still being charged the 10% base rate. Tariffs on U.S. imports have gone from an average 2.7% to 22%, the highest in more than a century. While first quarter earnings reported have been very strong, the biggest surprise has just been that companies are largely avoiding tariff discussions or just not even providing guidance on an outlook. Of the 180 companies that have reported so far, only 22 have provided guidance to their upcoming Q2 earnings. Nation, this management guidance is crucial to investors' ability to understand how much a company is going to make and how much a stock is worth. But companies just don't know, and in fact, the major airlines, Pepsi and Procter & Gamble, all withdrew their own prior guidance. Even for the companies sticking by their prior guidance, management guidance right now is about as reliable as your buddy's sure thing fantasy football picks. But that hasn't stopped Wall Street from taking earnings commentary and making their own cuts. On tariff pain and what was said in Q1 earnings, analysts have cut their earnings outlook for Intel by 46%. And for Tesla by 25%. So while the S&P 500 has jumped from that April 8th low, we're not out of the woods yet, and I'm still holding some cash and bonds to take advantage of the dips over the next 4 weeks. That's going to provide the buying power for more shares of the 5 stocks I highlighted in our previous video, but also the 5 I'm going to show you later in this one. Before I share those 5 new stocks I'm buying, I want to update you on the 5 from last video. The 5 stocks I highlighted are now up 14%, with Broadcom jumping 25%. Even laggard AMD clawing out of its hole. But now remember, Nation, these are long-term buys, using that market crash just to increase my holdings of these for supernormal growth and returns over the next 3 years. And my price targets remain the same on these, to $304 a share for Broadcom, AVGO, which would be up 64% from here, to $172 on Arista Networks, already up 15%, with another 132%, likely farther on that data center build-out. Also on the list, the trade desk is struggling with its lower ad spending, but could go beyond my $203 per share target. And while SMCI crumbled hard this week on its earnings, I still think it can reach $45 a share this year, and I'm watching for $144 over the next few years. And you can see these continue to be some of my largest positions here in one of my accounts. Shares of AMD are still at a loss to my $108 average price, but I used the covered call strategy to offset almost $9,000 of that loss already. Supermicro is my largest position by far, with 24,000 shares worth just over $800,000, and at a gain of $50,000 along with a net gain of $52,000 on the covered call trades. So you get a sense of my thinking here, folks. You can see I'm still aggressively using that covered call strategy just in case we do see further market weakness. I've highlighted this strategy as a great way to create income from your stocks, lower your risk, and still keep a lot of the upside return. And Nation, if you are not using options as part of your investing strategy, you are missing out. I asked the Bowtie Nation how they've been using our options investing course and was blown away with the response. George made over $26,000 buying the $30 calls on SMCI, a 315% return in just 2 weeks. And Justin made a 380% return on a call option strategy in 1 week. To help you get started, look for the link below and get a 38% discount. Save $150 off our Ultimate Options course. Over 3 hours of video, I start with the basics, then walk you through 29 option strategies, when to use each, and how to set them up, including a real-world example with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly how much you can make. You're going to get all that plus a 14-day money-back guarantee, but the $150 discount code is only available with the coupon code in the link below. I'll leave that in the description, so look for that or scan the coupon code here. Now let's get into those 5 more millionaire maker stocks, and the first one is one I highlighted in Wednesday's video, shares of quantum company IonQ, ticker IONQ. I highlighted shares of IonQ in December as one of Amazon's biggest bets, with its retailer holding over 1.9 million shares. And the stock was up 54% in less than a month. Now, those quantum stocks have come crashing down this year, but I updated on Wednesday why these could be some of your best long-term investments. That market for quantum computing could be worth over $173 billion by 2040, and really a revolution in computing that defies valuation. Now, IonQ was the first publicly traded pure-play company in that quantum computing theme, and its distinct advantages make it my favorite of the group. Its trapped ion technology offers high qubit fidelity and connectivity, a distinguishing feature compared to others like IBM and Google using those superconducting qubits. IonQ's patent portfolio, nearly 400 quantum networking patents, has helped it grow quickly and sign contracts with major partners like the Department of Defense and SK Telecom. Now, one thing you'll notice from the prior video is that nearly all those stocks were tied to the AI data center build-out theme, from Broadcom to Arista, AMD, and Supermicro. Now, only the trade desk and advertising tech was really outside that AI play. That data center theme is still one of my favorites, but for this list, I wanted to diversify out our stock picks into other growth themes like quantum, cybersecurity, and agentic AI. And just like we did with the stocks in our prior video, I'll be using the 3-year revenue forecast from E-Trade, along with the price-to-sales valuations to estimate a target price, and then the returns for the stocks. Here we see analysts have forecasted $289 million in 2027 sales for IonQ. That's from just $43 million in sales last year, giving us an unheard of 87% annual revenue growth. That is the kind of growth that we're seeing from these quantum stocks, and why I said Wednesday that even on these valuations, you just have to start building a position. That's because, yes, those valuations are still ridiculous. Here, IonQ is trading for a price of 132 times its sales. That's the market cap, or the total value of shares, divided by the revenue over the last year. It's that price-to-sales valuation for how much investors are paying, and even for these growth stocks, I hate paying any more than 10 or 20 times price to sales. But for a company nearly doubling its sales every single year and expected to do that for upwards of a decade, you just have to jump in here. Folks, I know quantum stocks are priced like they're selling real estate on the moon. Big dreams, but no breathable air yet. But like I said in Wednesday's video, I'm not going all in on these quantum names. They're still a very small part of my portfolio, and I'm adding a little bit over time, so I take advantage of any big dips in the stocks, but even a little here is going to grow larger. And you see that in this price target. If the shares of IonQ trade for that average price-to-sales value of 141 times where they traded at over the last year, and sales grow to that $289 million, the shares could be worth over $171 each over the next 3 years, or a 502% return. And even if the valuation comes down to a more realistic 60 times price to sales, that would still mean a market cap of $17.3 billion for a $73 price target and 155% upside. Here again, we'll look at analyst price targets as well, but understand these are for those 1-year targets, where mine were based on a 3-year revenue, so that longer-term outlook. But even here, among the 5 analysts surveyed, we have an average target of $39.50 per share for IonQ over the next year, and a high target of $54 each. Nation, more than anything, investing, and especially investing through a market crash, is about patience. Having the conviction of your analysis and holding on to those quality companies for the next bull market rebound. Do this and you will make money. I get emails weekly from you out there in the community, investments that we've talked about and have jumped, and how the videos have helped you make sense of the stock market and have that patience. But now it's your turn. I want to hear which stock you've had to wait the longest on. What's your longest holding, and whether it's been a slow and steady or you had to wait on that return. So let us know down in the comments. Next on our list, a leader in one of my favorite growth themes right now, Agentic AI, in ServiceNow, ticker NOW. The company's Agentic AI solutions, its AI agent studio and orchestrator, help businesses deploy and coordinate agents from onboarding employees to resolving IT issues. Few other companies offer this kind of holistic use case, pre-built and customizable agents, making the product accessible to any company, and a unified platform seamlessly integrating those AI agents across departments. This all gives ServiceNow an advantage with those hesitant companies that are just not sure yet about Agentic AI. And since mid-March, the company's partnership with Nvidia is propelling that leadership through integrations with Nvidia's AI enterprise software, including its NeMo framework and NIM microservices. The collaboration enhances productivity across some of the biggest industries for AI, including cybersecurity and telecom. Now, I highlighted ServiceNow in a video April 23rd on my favorite Agentic AI stocks, with the shares up 22% in less than a month. I'll link to that video in the description below as well. Check that out for the other 5 stocks. But there could be a lot more upside to go for ServiceNow in that Agentic AI theme, with forecasts for $18.5 billion in 2027 revenue, annual growth of 19% from last year's $11 billion in sales. Now, it's not the 87% growth we saw with IonQ, but then again, not that risk either, and a stock that's not trading in those nosebleed seats of valuation. Here we see ServiceNow is trading at just 15 times on a price-to-sales basis, the least expensive on our list. That's also a 20% discount to the longer-term average of 18.6 times on a price-to-sales basis it's traded at over the last year. So using that average and the forecast gives us a price target of $1,600 per share for a 77% return. Now, on the strong run in the shares lately, analysts haven't yet updated their own targets, which is part of the reason why I hate these shorter-term targets. Of the 34 analysts surveyed, we have an average target of just $1,000 per share, with a range from $716 on the low side to up to $1,300 each. Next up here, not only is CrowdStrike Holdings, ticker CRWD, one of my favorite cybersecurity plays, but it's also made our list of top Agentic AI stocks. Not only is the company's Falcon platform already the best available for enterprise cybersecurity, driving a 27% annual growth in recurring revenue, now its generative AI assistant, Charlotte, is saving weeks' worth of detection time, providing fast answers to real-time threats. And again, we see here part of its success is through its partnership with Nvidia, announced last March. With Nvidia's NIM microservices, CrowdStrike's Charlotte was able to double its detection speed, and with a 50% less compute resources, making it a huge step in efficiency. CrowdStrike is one of my largest positions at 300 shares worth $122,000, up almost 47% just in the past couple of years. And that cybersecurity theme is expected to take revenue up at a 21% annual pace to $7 billion through fiscal 2028, the 3-year forecast from last year's $4 billion in fiscal 2025 sales. Now, that strength in cybersecurity demand, though, means we haven't quite seen the sell-off in these stocks like we did with the rest of the market, with CrowdStrike trading at a relatively expensive 23.9 times price to sales. And that's actually more than the average over the last year, as these security names just keep running higher. But again, this is my top growth theme, and you need to get exposure to it. On that 20% plus revenue growth, and even at that lower price to earnings of 22 times average, gives us a price target of nearly $630 each, or a 52% return. Now, while that's the lowest return on our list today, but cybersecurity demand in these stocks just keeps heading higher, and I wouldn't be surprised if they don't beat even that forecast. But like we saw with ServiceNow, analysts are late to the game on this one, and CrowdStrike has outrun some of those forecasts. Even with the high targets of $475, only makes for a 15% upside, while the low leaves the stock 15% lower. But folks, here's the thing about looking at analyst targets. I use them as a sanity check and to see what other people are saying, but take these with a huge grain of salt. Nation, I've worked as a professional analyst, and honestly, a lot of these guys are always either chasing a stock on the way up or wrong on the way down. So always do your own research and estimate what you think a stock is worth. Back to our list, and SoundHound AI, ticker SOUN, almost made our first video 3 weeks ago as one of my favorite AI names. The company is a leader in conversational AI to businesses that can be used to build an AI assistant in 25 languages, a market it estimates as large as $160 billion. The shares popped 50% on a single day in July when it was reported the company's voice assistant would be used across Alfa Romeo and Citroën vehicles across Europe. It's also being used in Nvidia call centers, where it was found to produce a 20% increase in productivity. Here at one point, I owned 13,000 shares at an average cost of $5 each, but sold in January just under $20 a share for a profit of $190,000, a 290% return. I'm back in the stock again with a 10,000 share position worth $95,000 and holding on. Now here, SoundHound only has revenue forecasts out to the next year, so I used my own income statement modeling for an estimate here of $300 million in 2027 sales. That is 51% annual growth from last year's $85 million, and even that could be low considering the company's lead in voice assistant AI and its move into drive-through services. These shares are relatively expensive here at 35 times on a price-to-sales basis, less expensive than the average 40 times multiple, but still Like that IonQ, it's more than I like to pay for a stock, but with that kind of growth, it's worth it. If SoundHound can capture even a fraction of that $160 billion market and grow sales at that forecast, it'll hit my $30 price target and blast through it for more than a 227% return. Analysts are just as upbeat on SoundHound, with an average target just under $15 per share, or a 59% return, and even as high as 26 over the next year. That would take it back to the previous peak, but I'm holding on for that long-term view. This next stock has a 273% upside to my 3-year price target, and 60% just to the average analyst target over the next year. More than just the numbers here, you need to understand why this opportunity is coming to investors, how to read the market, and know what is coming. For that, I'm going to link to our previous video here in the corner for that complete analysis of earnings and why the market is acting like a spoiled 5-year-old strung out on pixie sticks, so check that out. Shares of Nvidia, ticker NVDA, are back down into value territory and a great deal for long-term hold strategy. Now folks, I'll admit 2 years ago, I didn't think Nvidia could post this kind of growth, but analysts see it continuing to $290 billion in sales through 2027. That is a pace of 30% a year from last year's $130 billion, so not the triple-digit sales growth that we've seen, but still amazing for a $3 trillion company. And surprisingly here, shares are not that expensive, now at 19 times on a price-to-sales basis, which seems like a steal compared to that average 33 times sales over the last year. I'm not sure it trades back at that average price multiple with that slower forecasted sales growth, but if it can, it's going to get to that $394 price target and a 273% upside from here. And the 40 analysts surveyed are just as bullish, with an average target of $168 a share. That is 60% upside just in the next year, and 107% upside to the high target, over $200 a share. Get your $150 coupon to our Ultimate Options course with the special code linked in the description. See all 29 option strategies, get the strategy finder, and the options calculator to show you exactly how much you can make, all with a 14-day money-back guarantee. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.